of the 10 years, I still have the property and I've also got a yield. And so the idea that I get interest on a sound money asset, I don't think is unreasonable in the future because it wasn't unreasonable in the past.
Well, so there's a great book by Homer and Scylla. It's called "The History of Interest Rates" or a 5,000 year history of interest rates. It's a fascinating book, and it collects data, numerical data on interest rates throughout human history, from Babylon all the way down to today. And they make a very, very interesting observation, which concords with what Austrian economists would say, which is that historically interest rates have been declining. And that's what an Austrian would predict because that's what the process of civilization is. So, from the Austrian perspective, interest rates are a function of time preference. As time preference declines, people are able to forego present consumption in order to save for the future. And so they have more and more resources. The more resources they have, the lower the cost they're willing to accept on those resources. So, the bigger the stack of money that you have, the more savings you have, the lower the interest rate that you would take. And the more savings that other people have, the lower the interest rate that you have to take. So historically, what we see is this 5,000 year process of interest rates declining and declining and declining and declining on the gold standard. But of course, there are always these interruptions. So a war happens, and we used to be at 6%, and then a war happens, and we shoot up to 60%, and then governments fail or bad things happen, and then interest rates come crashing back down. But the fascinating thing is, try and imagine a hypothetical scenario where in 1914 we stayed on the gold standard. So by 1914, the lowest interest rate in the world was the lowest interest rate in history, which was 2.5% for the Bank of England. That was the lowest interest rate. Now imagine they stayed on the gold standard. Now, of course, when they went on fiat, it all shot up. It kept going up until the 1970s.
But indulge me for 2,000 years. Like, what's the reasonable range of interest on sound money?
Depends on people's time preference.
Somewhere between 3 and but just the numbers that are like, I could also quote 100 examples out of history of civilization where they say 4%, 5%, 6. Normally, they have for trustworthy counterparties single digit interest rates, right? And so these guys must have some range of interest rates on sound money that have historical preference. What is it roughly?
Well, I mean, it changes over time. So it's basically a constantly declining rate of interest that continues to decline.
Well, it's not constantly, you just pointed out, like, and
Well, not constantly. In the long term.
it varies, right? And in times of war, it would shoot up, in times of peace and security, it might come down, and of course, there's a lot of, what is the word? There are a lot of variables, but all I'm getting at is, can't you find that it's not abnormal to have 4% interest rate on sound money? I mean, you can find plenty of examples of that throughout history, right? 4, 5, 6.
Yeah, it continues to decline. So this is the chart. I'm gonna show it to you here. I'm gonna share it right now. So as you see here, this is gone. I just dug this up from Google. So this is
I
from
can't I
3,000
can't
years.
see the numbers, it's too small, but, like,
Uh,
look, the real issue is there a natural interest rate or historic interest rate on sound money? I think there is,
yes, well, from the Austrian perspective, it constantly declines over time.
and I think Bitcoin is sound money, so
Not
if
constantly, but the general trend is for it to decline, and then bad things happen, like the 20th century here, as
well,
you see.
decline from what to what? Like, what?
Well, so 3,000 years ago, it was 20%, 10%, 18%, and over the last couple of thousand years, it's gone down. As you see here, by 1900, around the time of going off the,
I don't I don't buy into your thesis, which is that you're painting a world which is very simple, like, "Oh, yeah, interest rates just go down over time because of civilization." Well, that's the real question is, what's the value of the capital, right? And why should they go down or go up? And can you actually measure it against sound money? So
so that's not the Austrian theory on interest rate. It's not about the productivity of capital. It's about the time preference that makes the capital available. This is how Austrians they call it the pure time preference theory of interest rate.
look, here's the real point, Saifedean, which is you're taking the position that capital has no value. I disagree.
No, I'm
I
not
think
saying
I
capital
think the
has no
I
value.
think capital has value, and I think Bitcoin is digital capital. And so to imagine a world in the future where Bitcoin doesn't have value doesn't make any sense to me. if you have capital, then I think you'll be able to loan it to someone or rent it to someone, and they're going to pay you for it in the way that people did make capital available in the past. And the history of humanity is full of examples of banks that made loans of sound money and got paid, and people that paid interest on it. And you're basically taking this position that somehow interest rates go to 0 forever because of something, and I don't get the something. If Bitcoin is digital gold in the future, then you should be able to loan it to someone and get paid interest on it in the same way that we loaned gold in the past to people and got paid interest on it. And we can debate over what the number should be, but the debate is, certainly I'm not going to give you the Bitcoin for free. I'm going to expect to get paid for it. And if someone's going to pay for the capital, then there is a business model there. And it's worthwhile to consider the implications of that when Bitcoin is worth $100 trillion.
No, I agree. I'll just let me give you my theory on this, which is kind of, I mean, so the Austrians, one of the major contributions of Austrians is to make the case for interest rate. So I'm a bit of a heretic within the Austrians by having this idea, but from
Apparently,
yeah,
if you're against interest on Bitcoin, you're against interest on sound money.
again, it's not against, it's not me saying should, it's just me taking the point to its logical conclusion, which is from the Austrian perspective, it's about time preference. So the more savings you have, the more your time preference declines, and the lower the cost that you're willing to accept for your capital. So now extrapolate this again another 10, 20, 50, 100, 200 years. Eventually we get to the point where everybody's holding cash balances that continuously appreciate, so capital is enormously abundant, and interest rates have to continue to decline.
Okay, well,
Hang
this
on,
is
hang
okay.
on,
We'll just
hang on.
stop right there. That's not true. Everyone is not.
Well, okay, not necessarily everyone,
Right? Everyone is not holding Bitcoin.
but people who want to lend have an enormous amount of capital.
The
And
point of the economy is there's always somebody that has money and someone that doesn't. Saying
yes,
everybody has the same amount and they all have enough,
no, I'm not saying everybody has.
negates interest, but that's ridiculous. People don't have money, right? There's a lot of people that don't have money.
No, I'm saying capital continues to accumulate. A lot of capital continues to accumulate, so time preference continues to drop, and then the cost of capital drops below the cost of storage of capital. That's the key thing. So the nominal interest rate drops to zero because storing money becomes more expensive than the market interest rate. So I'd be, if I trust you and you're an 18-year-old and I know you and I know that you're worth taking a punt on.
I'm not following you at all. This makes no sense to me. Like, if you have $1 billion and someone else doesn't have $1 billion, you're not gonna give them the $1 billion for 0, and they're not and on the other hand,
Because holding the $1 billion costs you some, because you can't make a
it
yield on
costs
it.
you nothing. I mean, the custody cost of Bitcoin is 10 basis points or less.
Not exactly. I mean, you still gotta secure the place where you're putting it. You have to make sure that your house is secure.
You're not addressing the obvious thing, which is there's a 65-year-old that's retired that has plenty of capital, and they wanna live off their capital, and there's a 22-year-old that's starting their career, and they wanna borrow the capital,
Hmm.
and in normal
Equity.
healthy society, it's totally
Why not do it through equity? All I'm saying is that
you're just
lend.
an ideologue now. You're
It's not an ideologue. I'm just showing you the economic perspective from the idea of the time preference theory.
you have lurched into arguing against banking and credit theory, which has nothing to do with Bitcoin even. And the Austria, like you're basically arguing against anybody being able to borrow money, which is ridiculous. If a 22-year-old wants to borrow money to buy a car so that they can drive it from point A to point B, your position is what? You have to take yourself public and sell equity in the car company because I don't want to give you a loan?
No,
I
consumer
mean, like,
goods could.
I think you're getting very idealistic here. If a 65-year-old, they want to retire and get paid 5% guaranteed on sound money and live happily ever after with no stress. They want to give it to a bank, and the bank is going to want to loan it to the 22-year-old who wants to set up a business. And the 22-year-old doesn't want to give equity. Like when I started my company when I was 24, I didn't want to give any equity to the people that gave me the capital. I wanted to borrow the money, pay the interest. And so the the world for thousands of years has operated with one group of people making loans and one group of people wanting to borrow money. And there's always going to be the young, the orphans, the entrepreneurs that don't have capital, but they have time on their hands and energy and ideas. And there's always going to be people who are retired who have plenty of capital and they don't want to take the risk. They don't want to be equity investors. And so you're talking about time preference. It's a lot easier to have long time preference if I can retire, take no risk, and live off of my savings forever.
But there is no such thing as no risk. There's no such thing as no risk. There's always risk involved. And I think what fiat did is that it allowed people to basically outsource the risk to inflation. The central bank comes and bails everybody out when your loan goes bad.
Yeah, you're changing the subject here to like something totally different. We're talking about
No, because ultimately it goes down to the fact that Bitcoin supply is fixed. Because Bitcoin supply is fixed, there's no lender of last resort. And so lending is always inherently risky. But also, savings accumulate. So the size of people's cash balances go up. And so, what happens when something becomes much more abundant? If cash balances are 100x larger than what they are today,
okay, let's come again. Just answer me this question. How does the person with no money start a business, buy a house, or do anything while another person with all the money sits there? How does the person with all the money actually how do they actually live if they can't get any yield or get a loan on their asset?
they spend some of their money. It's not rocket science.
They have to sell their money.
Yeah, that's what money's for.
Oh, how does the person with no money buy it? How they
They work.
you're imagining an economy without credit.
I'm imagining an economy in which credit is either provided at an interest rate that is nominally zero because it is better than holding the cash because cash is so abundant and, and holding cash has a cost, or credit is provided in the form of equity, in which in the case of business. So the 22-year-old who wants to open a business might be able to find a cousin or an uncle or a friend who can lend him money for no interest rate, or because it's cheaper to give him the money than to keep holding on to it, or you'll find somebody to get equity in
Why
the
would
company.
okay, well, you just
And
have
again, I'm not saying
I
it should, and I'm not saying that you should ban it. So the key thing is, I'm not saying
I don't know, now you sound like somewhere between a communist and a socialist. You're like, you wanna pass a law preventing people from borrowing money.
no, absolutely not. This is economics. This is just if the time preference continues to decline, then the interest rate keeps declining.
Well, why you wanna pass a law to keep a bank from making a loan?
No, 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 no. The
Like,
point is that this becomes as a
what's
market.
wrong with a loan? What's wrong with a lot? Like, what's wrong with issuing a credit card, or what's wrong with a business loan or a mortgage, right?
So
You
again, the
have
key
some kind
thing.
of ideological hatred for credit or a loan, but it's nothing to do with Bitcoin. It's nothing to do with Austrian economics. It's nothing to do with sound money. It's just you're just taking this position that someone shouldn't be able to take a loan or make a loan for some random reason.
Again, I'm not saying that somebody should or shouldn't. Nowhere in my analysis did I say the word should. I think what's happening here is I'm just extrapolating the economic trends. We've got a couple of trends that you extrapolate, and then if you keep extrapolating them long enough, eventually you get to the point where cash balances accumulate. What happens if you have a lot more apples? If you have a lot,
That's ridiculous. Like none of those you can't can't extrapolate any of these trends.
why not? Cash balances continue to accumulate, so people have a lot more cash. What happens if we have more apples? The price of apple goes down. So if capital accumulates, then the price of apple goes down.
You might as well take the position that nobody can rent a house.
No, I'm not.
You might as well take the position that you can't rent a house or an apartment as long as you're going down that train of thought.
I'm not saying that that is the case. I'm saying, look, I'm just saying that capital is a different good because it continues to accumulate and it's something that is acquired differently from a house. There is no use of money in the same way that you use a house. But anyways,
Okay, that's totally wrong too. If I have $1 million in Bitcoin or $1 million in a house, they're both capital assets. I see a world where you can sell your house or you can rent the house. And you're contemplating a world where you're not allowed where it's illegal to rent the house and no one will ever rent the
no,
house.
no,
And I'm
no,
saying
no. At no
it's
point did I say it's
ridiculous to take
illegal.
the position that you can't rent the asset.
I'm not saying you can't rent it. You can do it if you want to. I'm just saying that on a market in which money continues to appreciate and time preference continues to decline, eventually you see a lot more equity. That's all that I'm saying. And I'm not saying it should. I'm not saying somebody should legalize it or criminalize it. I'm just saying this is how it would